Gold is money. Everything else is just credit. I didn't say this. JP Morgan did. He was arguably the greatest financier on the planet. Welcome to Realpolitik with Zaidi, where we dissect the raw power plays shaping our world. Let me take you back in time to 1978. Dallas, Texas. Two brothers, Nelson and William Hunt, wanted to prove something to their deceased father. Their father, H.L. Hunt, was a self-made oil tycoon, one of the richest men in the world in his day. His rich heirs wanted to go against the whole financial system and show their father's spirit that they could make a fortune too. They picked silver. They dive into futures contracts with reckless abandon, buying like madmen and driving the price of silver from just $6 an ounce to an astonishing $50 an ounce. That's an 800% increase. They end up buying a third of the world's silver supply, 100 million ounces. Think of it. They need 3 massive Boeings to fly this haul to Switzerland. There's a frenzy in the Yuan, a silver mania, if you may. People start selling their silverware, anything with silver that they can get their hands on. You know what happens next? The regulators step in. Comex, the commodity exchange, introduces Rule 7. It puts strict limits on buying silver contracts with borrowed money. Even the Federal Reserve comes into the fray. It tells banks to stop lending to the Hunt brothers, so they can't defend their massive positions any longer. The party is over. Silver crashes. Overnight, the Hunt brothers lose billions. Their father is turning in his grave. That was the old guard striking back with ruthless force to protect the paper empire. Some speculators allege that the same thing happened on January 30th, 2026, this year, when the price of silver crashed by more than 30%. And they blame JP Morgan for it. Why did this happen in the 1970s, and why is this happening again after Trump 2.0? To understand this, we have to go back a little further in time. 1945. After the Second World War, the global economy is in shambles. Nations get together in Bretton Woods to create a new trading and monetary system. The key element of this whole system is that the dollar would be pegged to gold at $35 an ounce. Every other central bank in the world would be able to exchange their dollars for gold. The dollar is as good as gold, it means. This gives much needed stability to global commerce, and for the next 25 years, it creates enormous economic prosperity in the US and around the world. There's a problem by 1970 though. The world economy has grown humongous. Everyone wants dollars to trade. So the Federal Reserve is printing lots of dollars, and there are 4 times as many dollars in circulation as there is gold in reserves. The US can't defend its peg any longer. The rate of $35 for an ounce of gold was good in 1945, but it hadn't changed. So by 1971, the dollar was really overvalued. That meant imports were very cheap and exports were very expensive. The US experienced its first trade deficit since the 19th century, and the country was experiencing employment problems on a massive level. You notice something familiar? Trump has been talking about the same phenomena. The president at that time, Richard Nixon, has to take action. On August 15th, 1971, from the comfort of Camp David, he announces that the Federal Reserve would no longer honor its pledge to convert US dollar into gold. This, along with the 1973 oil crisis, meant that the whole decade after 1970s sees stagflation. That means high inflation plus high unemployment plus slow growth. Inflation is in the double digits, which means that the dollar is stunting fast. Investors like the Hunt brothers wanted something tangible to hold on to, a real asset. Through 5,000 years of human history, gold, and by extension silver, has been the only asset that has consistently functioned as real money, outlasting empires, wars, and countless fiat experiments. The Hunt brothers targeted silver though, because unlike gold, silver is not really mined directly. 70% of its production is a byproduct from the mining of other metals, such as gold or copper. That means its supply is inelastic, and its industrial use means the demand is insatiable. This is even more true in this day and age when silver is used in solar panels, in electric vehicles, in electronics, and also for missiles and satellites. Some commentators allege that because of this, the military industrial complex can never let silver do true price discovery. Its price will always be suppressed, and it was especially so in the 5 years from 2020 to 2025. In 2025, when Trump assumed power, his detachment from the rules-based world order and his desire to weaken the US dollar to propel manufacturing in the US imbibed a fear of devaluation in the hearts and minds of investors. It is because of this that in 2025, gold surged more than 70% and silver exploded over 140%. In the beginning of 2026, though, much of that rally got reversed in just a couple of hours. On Friday, January 30th, gold plummeted 11% and silver a devastating 31% in mere hours, just because Trump nominated Kevin Warsh as the Fed chair, signaling to the market that he won't let the dollar weaken. Gold is not tied to the US dollar anymore, but it moves inversely to interest rates, propping up bonds and provides the illusion of stability in the financial markets. At the risk of sounding like a conspiracy theorist, I will venture to say that the powers that be can never allow the prices of gold and silver to rise beyond a certain level, because that would destroy the global monetary system. Look at the past few days. Comex, delivery, and position reports show that JP Morgan closed significant short positions in silver precisely at or near the bottom and stood for significant Comex deliveries, allowing them to exit shorts profitably while the market was in free fall. On the same day, the Chicago Mercantile Exchange raised the margin rate to 16.5%, and simultaneously, the London Metal Exchange coincidentally went offline due to some technical glitches. The US dollar may not be backed by gold anymore, but it's backed by something more tangible, something which we witnessed in Venezuela. One of the main reasons Trump nabbed Maduro was that he was thinking of selling oil in Yuan. China can buy Russian oil in Yuan, of course. Brazil may trade soybeans without ever touching greenbacks. The US may run a budget deficit of $2 trillion, but the US will fight to the death to preserve the status of US dollar as a reserve currency. Because if the reserve status slips away, the US faces a hyperinflation nightmare beyond your imagination. It will pale in comparison to Argentina. It'll probably be as bad as Zimbabwe's, if not Germany's under the Weimar regime in the 1920s. Listen, you know as well as I do that the price of precious metals and commodities, especially gold and silver, will continue to rise, but they will never replace the US dollar. There's no way of going back to even pegging any currencies to gold, because the total supply of gold ever, currently and in recorded history for thousands of years, adds up to only $30 to $34 trillion, which pales in comparison to the current annual trade. Just for 1 year, the current annual trade, that stands around $25 to $35 trillion around the globe. So going back to the gold standard would be akin to curtailing trade and clipping the wings of the global economy. We can probably see the Chinese yuan replace the US dollar as a reserve currency, but that's only when and if China is able to significantly outpace the US in total economic size and also assert its military superiority. Despite the world moving towards multipolarity, I don't see this happening anytime soon. In a nutshell, you can buy all the metals you want, but the US dollar is here to stay.